Actually, some of the projects you've invested in recently, including those that have already gone public and are very well known to everyone, like Eastroc Beverage, right? It went public in 2021, and I heard you had your eye on it as early as 2014.
Yes, Mr. Yan from Huabei Group is actually a very good business partner of mine, so I've been paying attention to functional beverages for many years. When Hongda China entered the Chinese market, it was also uncharted territory. It was like being a pioneer. During Dongping's IPO process, on the day it went public, Mr. Lin also expressed his gratitude to Yan Pingsheng from Red Bull because the trailblazers set an example for the market. As those who came later, we have the advantage of being latecomers. We're standing on the shoulders of those before us and excel in brand, distribution, and market presence. We have the opportunity to catch up and even to pass them. Take Dongpeng, for example. I've known Mr. Lin for 10 years. It took us 3 to 4 years just to discuss and negotiate this partnership, because this is a battle for the rise of national brands. Our goal is to strive to become the Red Bull for Chinese people, to replace Red Bull and become a part of everyday life for ordinary Chinese citizens. Consumer goods companies have a very distinct characteristic. Once a consumer goods company has established its brand and captured new market share, and it reaches its growth inflection point, then simply throwing money at it, using capital alone, doesn't really work anymore. I understand, because consumer goods companies have very strong cash flow, they're resistant to economic cycles, and they benefit from powerful market network effects and economies of scale. When I first met Mr. Lin, his company was already generating 1.7 to 1.8 billion yuan in sales revenue and over 100 million yuan in profit. But I believe that his hesitation at the time wasn't about the company itself. His hesitation wasn't about whether he could challenge Red Bull's reputation, but rather, he was planning a bigger chapter for the company's development in his mind. I think this was also a long process of mental preparation. So we waited for this day, and actually, during this waiting period, we didn't really talk about investment or partnership. So what were we doing? We mainly discussed the market. We talked about the industry, about building the company's brand, and about deepening the company's distribution channels. We discussed how our current communication methods have shifted from traditional big-screen satellite TV to a digital communication matrix, and how to build a deeply integrated digital distribution system. I think the later cooperation with capital was a natural progression. At its core, it was about like-minded people coming together. For companies like theirs, outstanding national brands and industry leaders, the essence isn't about choosing capital partners, but about choosing people who share the same vision to start something together.